So today we will be discussing a Bollinger Band strategy. Just produce returns like these. That's Apple, and this one's Amazon, HD, Johnson & Johnson, Walmart, Microsoft, Tesla. Doesn't perform that well in Tesla, but that happens. Visa, Procter & Gamble, some of these examples. Anyways, we'll start with the coding. The entire code is available in the description if you want to download it. The link is available. So what I want you to do is essentially click on open and then click on strategy, and whatever default thing that comes in, just delete it off. We'll start from plain blank. So first we need to do version equaled 5, so that'll be @ versions. Normally we do in version 4. Version 5 is available in the full tutorial, is available in the description box. I'll give a link there as well. So basically we just do a strategy, and then let's call it BB strategy, overlay equals true. And then we need to get the values of the Bollinger Band. So we can use the built-in function of the Bollinger Band, which is BB. So ta.bb will retrieve the values of that. And then I want to get the values of the series that I'm looking for. So the Bollinger Band series I'm looking for is basically, I'm just going to close this, these closing prices. So I'm going to make a small change in those things, but I'll come back to that in a bit. So the number of days of the period that I'm doing is 10, and the standard deviation is 2. Now we'll get the upper value, the middle value, and the lower value of the Bollinger Band. So I need to store that somewhere. So I'm going to create an array. So if I can just go there like that, and then click on Command plus click if you're on a Mac, or if you're on a PC, Control plus click, you'll basically get that it's a middle, upper, and lower. So I'm going to store this value to middle, upper, comma, lower. So we're already going to use the lower values. So now to the trading condition. So if close of 1 is less than lower, so which we are below the 2 standard deviation, and close is greater than ta.sma, close comma 200. So ta.sma is a moving average. So if you can see now, these values, number 10 and the close of 1, that is yesterday's close, not the day before's close, not yesterday's close, 2 days prior's close. So those are values that I received by optimizing different values. So by optimizing, what I mean is I take yesterday's values, day before yesterday's values, 3, 4, 5, 6 days values, and try out different strategies to see which one works better. So that's essentially called optimization. So optimization is just not enough. We need to do forward testing as well. So what we're doing essentially is back testing, but we need to test that optimized value into an untested data. So that's called forward testing, which is also used in YouTube, and probably this video is recommended to you because of forward testing by YouTube. YouTube has seen that you normally watch these kind of videos, so it kind of recommends you this video, and when it recommends this video, it's kind of like confirmation that their recommendation is correct. And once those both are done, then we do a Monte Carlo simulation. So once all these 3 things are done, then we finally do a portfolio optimization. So basically we do all these strategies on multiple thousands of stocks over 20 plus years, and then we confirm whether the strategy is ideal or not to apply on stock. So there are better numbers as compared to 10, and there are better closes compared to 2 days prior. You can have 3 days prior, 4 days prior, but I'm not going to give away lots of information. You can also try a different EMA. You can optimize yourself by changing these values, but you won't get far because there are lots of permutations and combinations with respect to it. But if you want to learn more about optimization, forward testing, and Monte Carlo simulation, there's a course available, Quant Program website. I'll leave the link in the description. These are the prices for our course as well. So the Prometheus program comes with 10 strategies and basically covers everything that you need to become a quantitative trader. So 10 strategies kind of gives you the solid foundation to create strategies yourself, and then obviously the other tools that a quantitative trader uses, like optimization and walkover analysis, helps you better. So now it's basically just click on tab and then do strategy.enter, entry, long, comma, strategy.long. So that will enter the strategy. Now, what about our exit condition? So exit condition is really, really crucial. So what I'm going to do is, rather than having a strict exit, what I'll do is basically I'll just give like a 4:1 risk management. So I'm just going to declare the values. We've discussed this before in our other strategies, which can be found in our YouTube channel. A thorough discussion of the stop loss and take profit can be found again on our YouTube channel, which specifically says creating stop loss and also creating trailing stop loss as well. So we'll just click on enter there, and then we'll just code the long stop and long profit, because we're only going long only strategy. So for stocks, it's ideal just to go long only. For commodities, we can actually do long and short, but stock, because there is more profit potential to the upside as compared to the downside. Downside, the maximum profit you can make is 100%, but the upside you can make a lot of profit. So fundamentally, you have an edge. And then if you're investing in companies which are robust, you have even an additional edge as well. So long stop would be equal to strategy.position underscore average underscore price and asterisk 1 minus SL. So basically this strategy, this one gives the average value of what you entered in the position, and then it calculates the stop loss. So long stop will give the stop loss value. So similarly, we can do take profit as well. So I'm going to copy the entire of this, just going to paste this here, and then we can do long profit. So instead of this, we'll do 1 plus take profit, because take profit is on the upside. So now we've stored both values of the stop and the take profit. Now we need to exit the position, right? So we don't want to give our exit signal if the position is closed. So we need the exit condition only when the position is entered. So we need to confirm that. So if strategy dot position, spell it wrong, position underscore size, so that'll return if there's a position. So if there's a +1, there's a size, is greater than 0. So when you're long, it will be +1, then tab, then strategy.exit. So the thing that we have entered was long position, right? So we need to give an ID to it. So what I'll do is ID equals close. So it kind of writes there as close, and then stop equals long stop, and then limit equals long profit. So the entire code is available in the description. I'll give it a link, so you just have to enter the email address and it will be sent to your email. So I hope this strategy goes through, but we're just going to double check everything if it's correct. Version 5, if close is lower, TA, strategy or entry, stop loss, long stop, take profit, everything looks okay. So I'm going to save this. Yeah, I'll save that, and I will add this to the chart. So now you can see the percentage is 0, the drawdowns are also 0. So these numbers are quite wrong. So what you need to do is you need to go to the settings section and you need to change it to 100% equity. So you can see the order size is 1 contract. So there's nothing wrong with 1 contract. The problem is initial capital. So the returns, like let's say you bought stock for $10 and sold it for $20. So you basically made 100% return, but that 100% return is compared to 1 million. So that 100% return here was just $10. So $10 compared to 1 million is a tiny, it's like 0.0001%. So it doesn't hold any value. So what we need to do is we need to change this to 100% equity, and then basically you get the correct value. So ignore the dollar term. So that is not correct, but the percentage terms is always correct. So you can change this to, let's say, 10,000. So I'm gonna delete a few zeros here, like 10,000, and the value barely changes. The dollar terms will change, the percentage change slightly changes because of rounding of the numbers, and that's why the percentage change have changed slightly, but the only thing you need to focus is on the net profit percentage, the percentage profitable, and the drawdown percentage. Ignore the dollar values. So dollar values is based on that initial capital. So even if I do 1,000, basically still I get somewhere around 1,800 percentage. So hopefully you got a gist. I'm just going to change this back to 1,000, 10,000. So the problem with Tradingview Pinescript is it's just a backtesting. It's not meant for backtesting. It's just meant for charting platforms, so they're not that thorough with all these things. So just want to give you a heads up. So I want to just go through the list of trades, and I want to see if that 10% and 40% works. So if you can see, yeah, 10% here, 40% there, 10% here, 40% there. So you can always see there's a 0.97, 0.03, 0.1%. So those are all kind of slippages, because when the market opens as a gap, so you can actually put settings and slippage, but it's kind of counterintuitive, because as you can see here, the 0.01% becomes an additional profit for you, or the before we saw a 9.97 becomes an additional advantage, less of a loss for you. So those kind of things are an advantage for you when it comes in a gap kind of a perspective. Another thing to add is, one of the first things I do when I create a strategy is I first backtest it on SPY and QQQ. So if it works in SPY and QQQ, generally it tends to work very well in practically all the stocks. So SPY here, it's got a pretty decent return, the minimalistic drawdown, QQQ as well. But there'll always be stocks where it doesn't perform that well. So JP Morgan, I think, didn't perform that great. Now, all these stocks, I think we've actually gone through. I think Apple, Amazon, we're going through. I think we've been gone through Amazon, maybe. Amazon, Netflix, Intel. So some of these stocks has performed tremendously well. Okay, there we go. Intel hasn't performed pretty decent. That's why diversification becomes quite important. Netflix, Google, gold. So basically there goes the list, but make sure you diversify. So you see this portfolio of stocks that I've selected. So what I do essentially is I've got a basket of stocks that I really like to do the strategies, and that basket is chosen from what other institutional investors or other big hedge fund managers have done, because they have actually done solid, good work in reading the financial statements and everything. So I know those kind of stocks are quite stable. So if you want to know the right details of the portfolio of stocks which I apply this strategy to, go to our channel, and there's this copy hedge fund managers results section, and that should explain to you how to find out these amazing stocks that the big hedge fund managers are into. So there are also other strategies like ADX and MACD and pullback strategy which you want to check out. So regarding the version 5 full tutorial, that's available here. You can check that out as well. And the trading stop loss is available here as well. The normal stop loss is also available here as well. So hope you enjoyed this strategy. Full code is available in the description for you guys to download. Have a great day.